Nigel, lots of earnings. Let's focus on Crompton now.
Well, that's right. Let's focus on Crompton. Well, the company's quarter-one performance was in line with expectations. We're joined by Mr. Arunachalam, the Chief Financial Officer at Crompton, to discuss the past quarter's numbers. Hi, sir. Morning, and thanks a lot for joining in. Well, overall, quarter one was in line with what the street was working with, mainly led by the strong performance in the ECD segment. What's the outlook as well as the volume growth you see for the remainder of FY25?
First and foremost, Q1 has been really good for us. This is led by our ECD portfolio, which grew at about 21%, and we continue to deliver industry-leading growth now for fourth quarter in succession. This is on the back of our Crompton 2.0 strategy that we launched about 4 quarters back, where we said the idea is to focus behind our brand, drive consumer-led innovation, and ensure that our go-to-market strategies are optimal, which would enable us to deliver better performances on a consecutive basis. Now, as we speak, this quarter has been one more quarter where we have delivered about strong double-digit revenue growths. We have grew our profits close to 40% PBT on a standalone basis and about 30% on consolidated basis. We see this growth to be broad-based. This is across categories in ECD. Lighting, which was one business where we said we will be arresting the decline and we will be getting back to growth, is on track. The lighting business is also back to growth. Butterfly, where we have started taking corrective actions, we are seeing early positive signs in terms of moving towards a profitable business, considering the losses that we had in Q4. Overall, the summer impact was also pretty positive for our business in Q1. And as you know, when we launched Crompton 2.0, the underlying strategy was to deliver a business that focuses on growth and absolute profits than profitability. We continue to stand by that. We expect this year to also in line with that, where we would deliver strong double-digit growth and deliver our EBITDA growth, which is better than the sales growth. The trajectory seems to be moving in the right direction.
Strong summer has led to robust growth, sir, in fans, air coolers, leading to higher growth in ECD revenues. How do you see demand from here on? Can fans touch double-digit growth?
See, fans as a portfolio, there are opportunities both on the product side and on the channel. So now let me start with the product opportunities. As you would know, we are the largest player globally in fans. Last year, we sold about 2 crore fans, and that is a base on which we have entered into FY25, and we have got a pretty good Q1 to start with on that. This is now further divided between our premium induction business, non-premium induction business, and there is BLDC. Now, our focus on premium fans is largely led by the new product launches that we have done over the last 2 to 3 quarters. Is helping us to penetrate better and drive market share in our premium category. Similarly, in our BLDC segment, we have launched an array of bottoms-up, grounds-up built products as compared to a product portfolio that could have been assigned to what we have already in induction and convert into BLDC, but we did a grounds-up strategy. So significant amount of new products have been launched in BLDC, which has helped us to make a reasonable progress on the BLDC market as overall on the fan segment. Now, insofar as the mass premium business is concerned, or the mass business of fans category is concerned, we do see channel opportunities here. As much as we have very, very high market share in some parts of the country, we do see there is still penetration opportunity available in other areas. Now, this being on one side, we also see premiumization playing a big role. That should help us to drive fans' value growth significantly better than the volume growth. Now, apart from this, there are also government initiatives that are helping us in a big way. One, starting with the entire PM Awas Yojana scheme, where new households are built in and where our appliances portfolio can have penetration opportunity. Rural electrification is also helping us in a very strong manner. Our rural and MFI portfolio has seen strong double-digit growths now quarter after quarter. On that go-to-market strategy with the other incentives coming from the government in terms of PM Awas Yojana schemes, etc., should also help us to drive that business.
All right, let's focus on Butterfly's performance, which was rather bleak, right? You had margins that were lower, revenues as well was lower because of channel restructuring. What's the revival we see from here on margins for the remainder of this year? Can EBITDA margins touch double digits in the second half of this fiscal?
Yeah, see, what we said in terms of Butterfly performance is we will start improving the business sequentially. If you have looked at our Q4 performance and compared that to Q1, we have improved both on revenue and bottom line. The business delivered a negative EBITDA in Q4. From there, we have moved down to a 5% positive EBITDA in Q1. The price actions that we need to take and the channel corrections that we need to take is ongoing. We expect that to get completed in H2. H1, we should be able to complete the entire pricing and channel action that we have to complete in Butterfly. As we enter H2, we should start seeing the business get back on the track of growth, start delivering about 7 to 8% EBITDA, and then improve from there onwards.
Okay, we wish you all the best of luck. Thank you very much for joining in and running us through your estimation of the business going forward. Thanks indeed. We take